Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 BMO Metals, Mining and Critical Minerals Conference in Hollywood, in Florida. Joining me today is Jason Simpson, President and CEO of Orla Mining, one of the best performing gold stocks over the past year. Jason, welcome back to Kitco.
Thank you, Paul, for having me.
Now, 2024 was a great year for Orla Mining. The company's on a tear. You are one of the highest margin gold producers. You achieved record production of about 136,000 ounces at an all-in sustaining cost of under $900 per ounce. Your share price increased 90% over the past year, and you now have a $2.2 billion market capitalization. But that's not all. You're also buying the Musselwhite mine in Ontario in Canada from Newmont for up to $850 million in cash. I think it's fair to say, Jason, 2024 was quite a year for Orla. What stands out for you and why?
Yeah, thank you for the recollection, and I would agree 2024 was an outstanding year for Orla. And I think about three key aspects of that. First, our record production from our Camino Rojo oxide mine that was done safely and generated tremendous cash for the company. Second, we used that cash to pay off all of our debt in 2024 and became debt-free within the year. And then finally, as you spoke about, the transformational acquisition of the Musselwhite mine in Canada has really propelled us into the intermediate space. So the combination of those three things made 2024 a great year for all of our stakeholders.
Now, as you mentioned, Musselwhite, hasn't yet closed, but that will put the company into that sort of mid-tier sector. That's quite a busy band or group of companies. Yeah. So presumably you're not done yet. How are you going to build on Musselwhite going forward? Yeah,
well, let's talk about the Musselwhite introduction into our company and the importance of that. There's really a number of reasons that it's important and why it propels Orla into the intermediate space. First and foremost, it immediately increases our production 140%. Now we'll be producers of over 300,000 ounces a year with first quartile costs. Second, we have the ability to grow that deposit, and we look forward to doing that. And third, once we close, and we're on schedule to do that this quarter, we will have financing through both our production in Canada and our production in Mexico to grow the company to 500,000 ounces a year. So we have really set up the company into the intermediate space with growth and free cash flow to continue growing the company. It's important to point out also, all of that was done with zero upfront dilution. And so by all metrics, financial and operational, it's been an accretive deal for Orla shareholders.
Now, the timing couldn't be better in many ways. The gold price is touching, US $2,950 per ounce. For Orla in particular, but for the sector in general, Jason, what is the opportunity that the sort of current gold price presents for the sector and company balance sheets?
Yeah, I think the opportunity is that gold companies in this environment should be producing significant free cash flow. They can use that free cash flow to grow the business by reinvesting the money that they're making, but also run the company in such a way that it's responsible enough to deliver additional returns to shareholders. So that's the opportunity for good gold companies in this environment to emerge, financing their own growth and returning and increased opportunity for our investors.
Now, we are in the 2024 financial results reporting season. Most of the big companies have reported, and most companies now have an all-in sustaining cost margin of above $1,000 per ounce. A number of companies are using their sort of cash bonanza, to phrase it like that, to increase their returns to shareholders. But it's noticeable dividends aren't increasing. Companies instead seem to be favouring share buybacks. Dividend yields are sort of pretty thin. So one could posit the argument, why bother? Wouldn't it be better to, given that we're in a business that mines finite resources, the continual need to replace ounces, wouldn't it be more better use of capital to buy growth?
I think you need to do both. I think that companies, as I mentioned, with the record free cash flow that we are making, should be using some of that free cash flow to invest in the growth, either through the drill bit or through acquisitions. Absolutely. But the story doesn't end there. The company also needs to be run like a business, and that business needs to consider avenues of return to shareholders. In the difference between the two things you mentioned, I think dividends are, when a company can graduate to that level, are an important representation of a well-run business. And that's why companies choose to do that, and I think it's appropriate. In terms of buying back their own shares, the reality of our gold equity space is that gold equities are at an all-time low. We haven't been this cheap for the last 40 years. And so we all recognize that lack of valuation. And if we can use our free cash flow to enhance that, reduce our share count, and create that value for investors, we can do that too. So use our cash to, yes, grow the business, but also enhance the return for shareholders is what you're seeing a lot of these companies doing. And I think that, over time, that'll create a movement of the larger market back into the gold space, given the opportunity that exists.
I think it's interesting, Jason, that you use the word maturity. I think since the 2018, 2019 mega mergers, maturity has been one of the things the industry has been trying to show, with Newmont and Barrick issuing 10-year production guidance, giving a sniff of 10-year cost guidance, presumably to show investors that it's a real business, it's a sustainable business, it's a business you can sort of plan on. And I guess with the share buybacks, you've also got the aspect that if companies aren't buying their own shares and don't believe they're good value, how can you expect investors to buy their shares and believe they're good value?
Yeah, similarly, whereas dividends show you, and I learned, many years ago, Sean Boyd taught me that, returning dividends to investors represents for the investor that you're running a sound business. We just happen to be a gold mining business. You're quite correct. Another way to demonstrate your conviction in the value of your company is to buy your own shares. And I think the examples you're seeing of that in the market are healthy, do show a level of maturity. At the end of the day, my perspective on growth needs to be quite focused. And Orla, I can tell you, is focused on growing value. And so in all the things that we've been talking about, whether it's increasing the gold exposure for our investors, returning money through dividends, or increasing value through share buybacks, it's about growing the value of the business. It's about running the business as owners. And when you do it in that way, and you've seen some demonstration of that in the market more recently, then you'll start to attract other investors that want to participate in the kind of value that Orla has produced, over the last 5 years, over 500% return.
I want to get back onto M&A in a moment, but first, Jason, we are at an investor conference, and arguably the best investor conference there is. So the question is, are you seeing investors becoming more interested in gold stocks again?
The reality is no. Although this is the best investor conference, and I'm hopeful that the outcome from these couple of days will be positive, the reality is that the gold equities remain undervalued, frankly the lowest in the last 40 years. The broader market has yet to seize that opportunity. We certainly have the gold investors that are very aware of that, and they're being rewarded more than they have been for some time. But frankly, the broader market is not here yet. As time progresses and as they can see this continued mature behavior from companies, then we'll attract that. There's an opportunity here for the broader market to acquire positions in gold equities at a time when they've never been cheaper.
Okay. Now, Newmont, the sector leader, has completed its divestiture program, 6 mines, raised over $4 billion through that. Many commentators expect M&A in the sector to pick up, and now that that's completed. And last night we saw Equinox Gold announce the takeover of Calibri Mining to create a 7.7 billion Canadian market capitalized company. What is your view on gold sector consolidation? You've obviously been an actor, you've done that, you are doing that. Yeah. And also specifically for Orla, given your low all-in sustaining cost, is it difficult to find transactions or projects that will help you continue that profile?
Yeah, well, a couple of things I'll offer there. First, yes, our industry was quite consumed last year with the Newmont divestiture process. We of course, we're a part of that. And we're very grateful to have taken over the Musselwhite asset. It will close this quarter from Newmont. That's going to be transformational for Orla. And the rest of the industry was also occupied in that asset and others. And so that did take up a lot of the time last year. Now that process has been largely completed to the benefit of all parties, I think there'll be more opportunity for the bankers and the miners to work on other value creative transactions. And I think that's healthy. As long as that M&A is done to create value, to create stronger mining companies, the market will not reward value-destructive M&A. We've experienced that before. And so far, we're seeing a maturity in the M&A approach to understanding how they can create value for shareholders. So as we move into that world this year, with a little bit more time, we spent 6 months on the Musselwhite work, and we're all consumed with that. As all companies have more time to focus on opportunities to create value for shareholders, I think you'll see selective transactions like was announced this morning.
We've talked a lot about maturity, the maturity of the sector during our conversation today, Jason. Is there a danger that as the cycle continues, as companies grow their cash base, etc., that we'll get into that exuberant cycle again where companies start overpaying for M&A and or building marginal mines that shouldn't be built?
Yeah, I think what I would offer is that's not healthy. So that exuberance takes us to a tipping point that's not healthy for our industry. We are in a healthy space right now. We are being held to account to run the businesses in a disciplined way, to focus on shareholder value. This is a good place. Oh, and by the way, the gold price is a record high. So this is a good place for us to be. And I would like to stay here and operate in this domain. That exuberance that you talked about will create a tipping point where poor behavior is rewarded, because all behavior is getting rewarded, and I don't think that is helpful. So what I would like to see as a trend going forward is that good gold mining companies that have strength begin to emerge as the leaders of this space, with a focus on shareholder returns and growing their value over time. That needs to be done methodically, and it needs to be done in a calculated way. And I think you're seeing some examples like our transaction with Musselwhite where we can create that kind of value for shareholders.
Okay. Well, Jason, let's end with a couple of forward-looking statements, if I may. What do you think will be the sort of key trends this year for the gold sector and for gold companies?
Yeah, I think we need to continue producing cash. We have the opportunity at these gold prices to produce significant amounts of cash. We should deploy that cash into growing our investors' exposure to gold, first and foremost, growing ourselves, and then offering enhanced returns for our investors so that we can attract a broader group from the market. Those are the trends that I would like to see. For Orla, we're going to close the transaction, graduate to 300,000 ounces a year, build Nevada, take ourselves to 500,000 ounces a year, and that kind of value creation is what the trend I'm hoping to see going forward.
Because of course, one thing we haven't spoken about is Nevada. You did a transaction a couple of years ago with Gold Standard Ventures, big multiple deposits there.
Yeah.
What are going to be some of the highlights or milestones for Nevada this year for you?
Yeah, it's going to be an important year for Nevada. We made tremendous progress on the permitting last year in Nevada, so we're now in a position where we're completing detailed engineering for that project, which will inform our procurement process in the second half of this year. So if we can couple permitting progress with our engineering work, by the end of this year, people will see meaningful steps to building that project, starting with procurement, so that once we're final permits are in 2026, we can hit the ground running in a way that we did in Mexico, such that we're producing in 2027. So by 2027, Orla will be a 500,000 ounce a year producer across 3 nations of North America at first quartile costs. That's a healthy, strong company that we offer investors.
Happy days. Jason Simpson, thank you very much for joining us.
Thank you, Paul. Yeah.
And we have a lot more to come from the 2025 BMO Metals, Mining and Critical Minerals Conference in Hollywood in Florida. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.